Hello everyone, welcome to my class, The Leisure Room by Parasmani. Today we are going to talk about accounting equation, and the equation is assets is equal to liabilities plus capital. Here we are not memorizing this equation today in this class, but we will learn the basics of all these each and every terms, assets, liabilities and capital. So first of all, to run a successful business, a owner or a person needs assets. So what does a business need? First of all, to run a business, we need different type of resources such as cash, land, building, furniture, inventory, machines and equipment. So to run a successful business, first we should have enough type of resources. So these all resources in accounting terms are called assets. So you have to be first clear what are the assets. Assets may be in the form of cash, land, building, furniture, inventory, machines and equipments and various other type. And the second steps is where do these assets come from? Asset may be land, labor, capital, building. So basically it is related to money. First, to run a successful business, a owner should have a money himself. So the asset may come from owner's capital or equity. In accounting term, it is called capital or equity. Owner's capital, which he or she will invest by himself or herself. And if the money is not enough, he or she should borrow from somewhere, maybe bank, suppliers or various type of creditors. So in this, these are called liability in accounting term. Let's understand step 3, basic accounting equation. So every asset must come from either owner's capital or equity or from the loan, which is called liabilities. So every asset must come from either owner's capital or equity or outsider or borrowed fund, that is called liabilities. So we have derived this equation, assets is equal to capital plus liability. So this is a simple or basic accounting equation. Now let's move to the step 4, which is understanding change in capital. When a business earns a revenue, it increases profit. When a business earns the revenue, it it will automatically increase the profit, and which also increases the capital. And another condition is when the owner pays the expenses, profit will be decreased, and so the capital will also be decreases. And another condition is when the owners take the money for himself or his personal use, then it is called drawing, which also reduces the capital of the organization or company. So the expanded accounting equation will be asset is equal to liabilities plus capital, which is normal equation, and we have added revenue and we have less expenses and drawings. So this is expanded accounting equation. I think you I think you have made the concept of accounting equation in a simple way. Now let us understand through the example. I have taken a very simple example. A student starts a tea stall. He invests cash Rs 10,000. No loan have taken. So what will be our accounting equation? As you all know that accounting equation is equal to asset is equal to liabilities plus capital. Here liability is equal to 0, and he have invested cash Rs 10,000. So asset will be 10,000. Asset and liability plus capital should always be equal. If it is not equal, our answer will be mistaken. Now let us suppose if this same student earns revenue of Rs 5,000 and he spent expenses of Rs 2,000. We have expanded a formula for this accounting equation. Asset is equal to liability plus capital plus revenue minus expenses minus drawing. Here liability is 0, capital is, we all know, it is 10,000, and he have on Rs 5,000 of revenue, and he have spent Rs 2,000 on expenses, and his drawing is 0. So 10,000 plus 5,000, 15,000 is minus 2,000, 13,000. Asset will be 13,000. I think you have understood with this very simple example of a student and his tea stall. He have invested his own money of Rs 10,000 in the very beginning. He had not taken any loans, and with the simple equation, he have 10,000 in asset and 0 in liabilities, and capital will be 10,000. So 10,000 is equal to 10,000. And if he had earned Rs 5,000 as revenue and expended Rs 2,000 on expenses, new equation will be liability is equal to 0. He have not taken any loan. Capital is 10,000 already, and revenue is equal to 5,000, and expenses is equal to 2,000. He have not uh, spended any personal expenses or taken any money for his personal use. So asset will be 13,000, and another will be also 13,000. So this is very simple example of accounting equation. Let's move to the bigger one or advanced one, so that you will be very clear. Suppose a paras, myself, I have owned a small grocery shop, and I have invested capital Rs 5 lakh, and I have taken loan from a bank. It is of 3 lakh, and I have purchased inventory of 8 lakh. So the equation will be assets is equal to liability plus capital. So here liability is 3,000, 3 lakh, capital is of 5 lakh. So our asset will be of 8 lakh. Here inventory is purchase of 8 lakhs. So we have liability 3 lakh, capital 5 lakh. And suppose I own the revenue of 2 lakh, and I had spent expenses of 50,000 and drawing of Rs 50,000. So new equation will be asset is equal to liability plus capital plus revenue minus expenses minus drawing. So here liability is of 3 lakh, capital is 5 lakh, revenue is 2 lakh, expenses is 50,000, and drawing is 50,000. So it will hamper asset as well. So 8 lakh 10 lakh minus 1 lakh, 9 lakh. 9 lakh will be the assets. I think you have understood the basic accounting equation, which is asset is equal to liabilities plus capital. And thank you for the class. Uh, and sorry for my English. I do not have to talk in English in my country very much. So sorry for my English. If you have any queries, please give me a comment.